Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. Market participants have again been gripped by fear due to Washington's intention to expand tariff duties by 20% and virtually all US trading partners. On Friday, S&P 500 stock index plunged by 1.97%, and now the equity market may take the lead in shaping risk sentiment. If that happens, the euro may not withstand the pressure and could follow a medium-term downtrend. On the daily chart, the single currency continues to climb. The signal line of the Marlin oscillator has entered positive territory. And formally, the price is moving toward the target level of 1.0955. There is time for this move, as the key developments are expected on April 3, when the new tariffs take effect. Investors will then begin reassessing risks based on those measures. On the 4-hour chart, the price is approaching the MACD line. It's a blue line on a graphic. This is a timely signal, as a consolidation above this resistance level would indicate that the bulls are ready to continue the rally toward 1.0955. The initial impulse came from the Marlin oscillator reversing off from zero line. The nearest support level is 1.0762. A break below it would open the way to the 1.0667 target. The direction of the S&P 500 index will influence the sustainability of the trend in either direction. For now, the situation remains uncertain. And now it's time for GBPUSD. Let's discuss it with Paolo Greco. The average volatility of the GBPUSD pair over the last 5 trading days is 78 pips, which is considered as moderate for this currency pair. On Monday, March 31, we expect the pair to trade within a range limited by 1.2881 and 1.3037. The long-term regression channel has turned upward, but the downtrend remains intact on the daily time frame. The CCI technical indicator has not recently re-entered the oversold or overbought zone. The GBPUSD pair retains a medium-term bearish trend, while the ongoing minor correction on the H4 timeframe chart may end sooner or later. However, if you trade strictly on technical signals, long positions remain relevant with targets at 1.3037 and 3062. Provided the price stays above the moving average line, it's a sign line on the graphic. Short positions remain attractive with targets at 1.2207 and 1.2146. Since the upward correction of the daily chart should eventually end. The British pound appears significantly overbought and expensive, and Donald Trump will not be able to devalue the dollar indefinitely. But it's difficult to predict how long this Trump-driven dollar slump will last. That's all for today. Wish you best of luck.